Small and medium enterprises find it hard to comply with many of those requirements. The objective was appropriate. Are there some entities which are perhaps misusing that facilitative framework? We have received feedback that is the case.
Flagging the fraud in the broader markets, that is your small and mid-cap indices, SEBI Chairperson Madhabi Puri Buch minced no words in categorically stating that the regulator is seeing signs of manipulation in that SME segment. She was speaking on the sidelines of an AMFI event where she went on to say that the regulator was working on some robust evidence as well as feedback in order to take certain action. But what really prompted her to say this, and what are the additional disclosures that SMEs will now have to provide? Let's find out. And for more such updates, don't forget to subscribe to Moneycontrol's YouTube channel.
Are there others where the valuation parameters seem to be off the charts and not supported, by fundamentals at all, and completely appearing to be, as regulators like to call it, irrational exuberance?
Now, for the regulator to state that valuations of a certain segment have gone off the chart spells a word of caution, and rightly so. In 2023, mid-cap funds saw inflows worth of 22,913 crore rupees, whereas small-cap schemes saw inflows close to 41,035 crore rupees. On the other hand, we saw large-cap schemes which saw outflows of close to 2,968 crore rupees. And this isn't the first time that SEBI has acted in this manner. On 27th of February, mutual fund industry body AMFI issued a circular based on an email it had received from SEBI asking mutual funds to moderate their flows as well as rebalance their portfolios. This in light of the froth that was building up in the broader markets. Now, fund houses were also asked to take steps in order to ensure that the investor be protected from that first mover advantage of redeeming investors.
As a first step, we are clear that some more disclosure in terms of risk factors. So for investors to understand that the SME segment is different from the main board, the regulations are different, the disclosures are different, and therefore the nature of the risk is different. I think it's important for SEBI to underline that in terms of disclosures to the investors.
And the investment frenzy of retail investors, especially in the mid and small cap funds, in the last few months has only grown as markets have touched new highs. Let's not forget the exuberance in the primary market, especially in the SME segment. The reality is that since these are relatively small entities where the market cap and free float is quite small, it makes it relatively easy to manipulate both at the IPO level as well as the trading levels. It is in this context that the market regulator SEBI decided to initiate certain steps to protect the retail investors in these funds. In this letter, in fact, to fund houses, AMFI had asked AMCs to disclose the risk parameter related to mid and small cap mutual fund schemes, this to be displayed on their website. The information on how long it may take for these schemes to fulfill any large redemptions and the impact of large outflows on the portfolio value and how much cash levels that these schemes can maintain in order to handle these redemption requests in case of a big fall in the market. Remember, the liquidity in small caps is usually much lower compared to that of large cap. And hence, with the stress test, what SEBI wants these fund houses is to be prepared for any such eventualities. In fact, it wants these mutual funds to disclose that stress test result of these small and mid-cap funds as early as March 15th that they will need to display this.